Should I start? It's on. Good morning, everybody. I welcome you again to the session 2 of I welcome you again to the session 2 of our ongoing sessions on mastering corporate social responsibility. Today, before we start, I'm happy to see that 4 more participants have joined. Unfortunately, they have missed the first session, so very quickly I will introduce them with the group. Mr. Girish NP, he is a legal counsel. He is coming from RCI India Private Limited. Then Miss Rosette Silveira, she is a corporate human resource and administration professional, and she is coming from Wacker Chemi India Private Limited. Miss Manorama Kotian, she is from Office of Strategy and CSR. She is coming from Wadwan Global Capital. Miss Madhu Loyal, she is a program manager of CSR. She is coming from Agilent Technologies International Private Limited. So I again welcome to these 4 new participants, and I'm really sorry that you have missed the first session where actually we have tried to create a common perspective of CSR, corporate social responsibility or business responsibility. So I would request you, to all the new participants, that you please download the PowerPoint from the CII, mycii.in website, and probably what we'll try to do is that we'll try to arrange a separate Skype session with you on a weekend probably, and see that if we can catch up with that together. Now, today what we'll do is that quickly we'll do a recap of the first session. Then we'll have a bit of discussion on business case for CSR. Then we'll glance through the guidelines, international guidelines relating to CSR. And then finally, we'll have a discussion on national mandate for CSR. That is the new Companies Act 2013, Section 135, how it is mandating corporate social responsibility. Now, as we have discussed in the first session, that we'll have to see that we'll have to really try to see the national mandate of CSR, that is the Companies Act, in the perspective, in the holistic perspective, what we have discussed. Is it audible? Yep. So, as we agreed last time that we will have a small break at around probably 11:50, 11:50, and then again we'll resume at around 12 o'clock. But if time permits, then only we'll have the break. Otherwise, we'll have to skip the break because we have quite a bit of tight schedule for today. Now, as we discussed last time, if you see the business responsibility, or commonly we call it corporate social responsibility, in a comprehensive framework, and we thought that these are the 2 comprehensive and contemporary definitions of corporate social responsibility, or explanations of corporate social responsibility. Probably we'll have to take it as our reference point. The first definition is by EU Commission. It is saying that a concept whereby companies integrate social and environmental concerns in their business operations and in their interaction with the stakeholders on a voluntary basis. So this is something what we'll take as the global framework, and we'll try to see that this is a kind of broad perspective, and in reference to that we'll try to today locate the Companies Act, the Section 135 of Companies Act, where in India we have mandated corporate social responsibility. Now the second definition is saying that, which is actually given by the World Business Council for Sustainable Development. It is saying CSR is the private sector contribution to sustainable development. Now, if you take these two frameworks, these are actually giving us a frame of reference to look at our provisions, to look at our activities, and to look at that, how we'll set the future direction of our respective businesses. And also we discussed about different theories, and we tried to see that through different lenses, how do you look at corporate social responsibility. The first thing was the instrumental lens, and in that we are trying to see that, by corporate social responsibility, the businesses might probably enhance their profitability, financial profitability, and that is the way it is explaining that why corporate social responsibility or environmental and social responsibility is essential for the businesses at the contemporary time. The second part was very interesting, as we discussed last time, the political lens to look at corporate social responsibility. It is saying that the businesses are actually expanding their power and authority through the social segment, and they are also getting into the development, so that they are sharing the common ground between the business and the market, so that gradually the businesses are getting more and more powerful. They are having greater influence over the social fabric. The third lens what we have used to look at corporate social responsibility was integrative, so that we are saying that business by itself has the social responsibilities inbuilt within the strategies, and it is integrated, so that whether it is financial, it is non-financial, it is social or environmental, it is a part and parcel of the business strategy itself. And the fourth lens what we used was the ethical. So in ethical lens, what we are, the way we have seen through the ethical lens, that whether it is enhancing the business profitability or a kind of political influence it is enhancing, or it is integrated or not, businesses should have some social and environmental responsibility, whether we can establish that it is actually profitable for business or not. So that was the kind of ethical framework we have discussed. Now, very quickly, the four kind of, we have discussed a lot of things. We have discussed evolution last time, and we have tried to see that how the concept has evolved through different phases. But at the same time, we have realized that at any given point of time, there are different kind of logics or different kind of rationale behind corporate social responsibilities. Different authors, different sociologists, business managers, they have come up with economists. They have come up with different kind of theories. But broadly, at this point of time, if we look at the different kind of CSS and by motivations, why they are doing the corporate social responsibility programs, then we broadly saw that there are four kind of motivations, broadly we can really refer to. One is the philanthropic. This is straightforward, that there is a kind of altruistic definition, there is a kind of altruistic motivation, and that is why the businesses are doing that, whether there is any business profit, financial profit or not, whether there is a kind of legal framework or not, that does not matter. And we see that in India and also abroad, there are many businesses, they have been doing this philanthropic corporate social responsibility for a long time, even now. Risk mitigation, as a part of risk mitigation strategy, sometimes mostly we had discussed about those businesses who are site-based businesses, the manufacturing industries, especially if there is a kind of land acquisition case, then definitely there are different kind of perceived social risks around that operation, so that to neutralize that social risk or environmental risk even, the corporates are doing some kind of activities, and they're extending their activities towards society and the environment, and that is the way they are trying to mitigate risk. So compliance could also be broadly be included in this particular category, so that what they are trying to do is that they are trying to minimize the compliance risk. Then the third category, we thought that the strategic CSR, in this actually we thought that in corporate by doing some kind of social responsibility or social activities, the businesses can influence or minimize their, influence their cost and price factors, so that what they can do is that they can minimize the cost factors, and they can also actually offer their goods and services in a better price, better price model. So in that we discussed about few of the examples, like Hindustan Unilever's Shakti Amma project. In that, what we saw that they have actually used the channel of different kind of social organizations, and we saw that with self-help groups, with a group of women, how they have done the marketing of their products, and through that what they have done, it is a kind of marketing strategy they have taken, and through that they have actually influenced their cost factor and price factor, and also reached out to a wider audience, and this is a kind of untapped market they have reached out to. So that's a kind of social activity what we can put it in the bracket of strategic corporate social responsibility. And the structural corporate social responsibility, we discussed that some of the businesses, they are to create social values. We thought a good example could be the business of iodized salt. In that, the business is actually trying to address the issue of iodine deficiency, and the whole business exists for that particular social purpose, and they are making business specifically to sustain their business and to attain that social purpose what they have really existing for. So broadly, the four categories what by motivation we saw: the philanthropic, risk mitigation, strategic, structural. Now these are not all isolated. A particular company might have few of these in combination. Different companies at this point of time are actually having all kind of these motivations to do. We have seen many companies who are doing strategic CSR, so that they are actually doing a good business through the social activities what they are doing, but at the same time they have a separate activities probably which is more will fall into the category of philanthropic CSR. So these are the broad segmentation we have done, just to understand different kind of motivations of different businesses, why they are doing or getting involved in different social activities. With that, finally, what the framework we refer to, that is a framework of UNESCAP, so the United Nations Economic and Social Commission for Asia and Pacific. This particular framework is giving us a very comprehensive framework of corporate social responsibility. In that, what we think is that business responsibility is having three different segments. One is economic, second social, and the third is environmental. In the economic aspect, what we have discussed, that what are the issues they should address to is: one is combating bribery and corruption, investing in infrastructure, creating jobs, contributing to local economy, generating sales and profits, driving innovations, driving tax responsibility. In the social aspect, the elements we have seen: complying with the law, good working condition, treating suppliers fairly, good community relations, respecting human rights, ensuring product safety. In environmental aspects, the elements are minimizing waste and emissions, using energy and resource efficiency, protecting biodiversity, using environmentally sound materials and energy, minimizing use of hazardous substance. So when we talk about business responsibility as a comprehensive framework, and we really don't look at social responsibility or economic responsibility or environmental responsibility in silos, in isolation, then we see that the business responsibility consists of three different dimensions: the economic dimensions, the societal dimensions, and the environmental dimension. So what we say is that every business has three different kind of responsibilities. The first thing definitely is the financial responsibility, and we also discussed that if a business is not making profit and not generating income and employment, probably that particular business is the most irrelevant, socially irrelevant business, we would consider. But with that financial responsibility, they have certain social responsibility and environmental responsibility, so that it is a more comprehensive approach. And we try to see that, if we talk about business responsibility, then they will have to fulfill all these three, requirements, prerequisites to be a responsible business. Now, let us look at the business cases of CSR. This is something, the discussion what we'll start with today. The different kind of frameworks we have, as we have discussed, that one particular framework try to see whether there is a business benefit, a financial benefit to the company in short term or long term, directly or indirectly, so that the business actually should invest their capital or even shareholders' investment to something which is not, in real sense is business. So in that case, people try to establish that what are the business cases for CSR. Now, there are different ways of looking at CSR, as we have discussed. One can argue that business by itself is a social value, primarily a social value they are creating, whatever the business it is. As we discussed, that there are different kind of social realities, and any business is a response to that particular social reality. Sometimes the way they do the business is not very responsible, the way they try to address the social reality. Sometimes it might be, it's a very responsible way they try to address the social reality. Now, if you see that even different kind of addictions, different, even if we take a example of, say, cigarette smoking. Now, smoking is also social reality. I mean, whether we like it or not, whether it is good or bad for health, it is good or bad for the society, but it's a social reality. So any business essentially is addressing to that social reality. Now, it depends that whether we are trying to encash that addiction, or we are trying to do a business to minimize that addiction or the social evil. There could be different business strategies, what we can adapt to. But essentially, it is looking at some kind of social reality. So anyway, so let us see that, there are different cases that, people try to say that, but in all the cases, with a caveat, I will get into the discussion why I am explaining all this, that, not essentially that all corporate social responsibilities, not essentially it is, I would say that, empirically established that there is a definite link with the business and the profitability of the business and the social responsibility. But there are different case studies, there are different researches for particular segment of businesses, for different businesses, a number of businesses, there is a kind of direct link. People have understood that with social responsibility, there is direct link of the business profitability. But many other cases, actually, what I thought that that proof is not that evident. Yeah. But, let us actually see that, at least take few of the cases where we see some of the direct links where, by doing some social activities, the business has actually improved on their profitability factor. So I will come back to this. Before that, I will straight go to the business cases. So the first case we want to discuss about making green fashionable, the body shop case. Many of you probably know this body shop case. Now, what happened? The body shop forged a reputation as a responsible business long before it became fashionable. They were one of the first companies to publish a full report on their corporate social responsibility initiatives. The founder, Anita Roddick's passionate belief of environmental protection, animal rights, community trade, and human rights, the company has gone so far as to start the Body Shop Foundation, which supports fellow pioneers who would normally struggle to get funding. over 20 years ago, the company set up a fair trade program. Well before the term fair trade started to become popular on supermarket shelves, of course, the Body Shop is famous for its anti-animal testing stance. Whilst this makes testing their product more difficult, especially in markets such as in US, Japan, their position has created a loyal customer base. The results from the opening her first store in 1976, 30 years later, and Roddick's empire was taken over by L'Oreal for 652 million pounds, where it has continued to make annual profit of over 40 million pounds. Now, in this case, what we see that what they have done is that the value addition, what they have done, and actually that has created to their business purpose, they have said that they will not do any animal testing, and they have started a huge campaign against doing animal testing. Doing all these products, what they have been doing, or any other products, the other companies are doing, they have started a campaign that should not be tested on animals. Now, by that, what is happening is that definitely in US, Japan, and other countries where actually people are more sensitive toward these rights of animals, and also they are very sensitive about the products, that these products are safe or not, whether it is tested or not. But a group of customers, a segment of customers, they prefer to go to these shops and to have these products because this is not tested on animals. So they have created a very loyal customer base. And we see that in 30 years, there is a kind of, huge enhancement in the profitability of that particular company. But with the caveat, again, I would say that, is there any other externalities? Is there any other external factors which is also contributing to the enhancement of the profitability of this particular company with this campaign? Probably this campaign has some influence of the profitability of this company. That's something we'll have to really establish. But this is claimed that through this kind of green, they made green fashionable. They made actually a big campaign against animal testing. By those social values, creating social values, they're adding up to their business value, and that has actually a distinct, influence over their profitability of the business. Now, the second case, what we would be discussing is of Walt Disney. Now, moving beyond making cartoons, today the Walt Disney Company additionally owns the ESPN and ABC network, Holiday Resorts, publishing businesses, to name a few. The result is a lot of social and environmental impact, as well as the ability to influence a huge amount of people. Importantly, Disney recognized that you cannot entertain a family on the one hand and then disregard the world and the circumstances in which they live. Acting responsibly gives the company credibility and authenticity. Accordingly, they have set themselves strict environmental targets and disclosure. And they have one of those companies who have actually, used the GRI framework for disclosure. Setting and they have set a very ambitious financial targets together with environmental performance targets, as may sound like an oxymoron, but Disney has managed to do this with initiatives such as running Disneyland trains on biodiesel made with cooking oil from the resorts hotels. They also created the green standard to engage and motivate employees in reducing their environmental impact when working. Having meeting, traveling, and eating lunch with more than 60,000 staff, the results are enormous when everyone is pulling in the same direction. A clear example of financially benefiting from reducing environmental impact is made with this simple statistics. A 10% reduction in the corporation's electricity use is enough to power the annual consumption of 3 of their theme parks. Whilst their CSR effort may have taken a great deal of organization, dedication and investment, 2012 was a record year for Disney's profits. Now, in this particular case, the first case, we saw that there is a kind of social movement they have created and a social value they have created, and that has a reciprocal relationship with the profitability of the business. In the second case, what we are seeing is that broadly, how they are getting into a kind of green campaign and getting into a more energy efficient operations. By that, they are reducing their energy consumption. If you can understand that a company like Disney, if they are reducing the 10% of energy consumption, then what kind of monetary value of that, and they are reducing 10% of their energy consumption, and they are actually increasing their profitability by being more energy efficient. So this is a second example. So that in the first case and in the second case, what we are seeing that by doing something which is apparently non-business, non-financial, some of the values they're creating, through that what they're doing is that they're enhancing the business value, the profitability of their respective companies. Now, if we go back with these two examples, that to the different motivations again, so that what we saw that there are I can give you several more examples for that. Business cases in India, we have already given you a few examples of HUL. We have given example of ITC, that eChopal program and all. So in those cases, we see that there is a direct link of corporate social responsibility with the business performance, and in short term and in long term, or directly or indirectly, there is a kind of profit impact on the profitability of the companies if they are doing something non-financial activities also, environmental or social activities also. But at the same time, I said that at this point of time, if we try to see that all the businesses who are doing social or environmental activities, especially the social activities, is there any direct link can be established empirically? That might be a little bit of difficult, but there are strong cases which suggest that there is a direct relationship between the social performance with the business performance. Environmental performance, probably that is little more straightforward, because by doing a more energy efficient business, by taking care of the environment directly or indirectly, in short term or long term, there is a more definite chance of influencing the profitability of the business. Now with that, let us see that what are the CSR drivers, as based on our discussions, what we have discussed so far, to motivate a company, to drive a company to take up some of the social responsibilities. One, definitely what is very apparent and commonly seen is that to create the brand image and reputation. Some of the businesses, like we saw in the case of in some of the cases, like even if you take the case of Shakti Amma of Hindustan Unilever, if you take the case of Body Shop, they actually gain competitive edge over the other companies of who are producing same kind of products by doing some kind of corporate social responsibility or doing some kind of social activities, social programs. So by doing corporate social responsibilities, there might be some companies who are gaining competitive edge over the other companies. Now again, is that all the companies are having competitive edge? Whoever is doing social activities, I know that is something, it's debatable. But at the same time, if somebody can actually take up the activities more strategic manner, in a purposive manner, probably that might actually contribute to the competitive edge of that particular company. Now business ethics, as we have discussed, whether there is a business return to that particular corporate, whether there is a profitability impact on the profitability or not, there's an impact of sustainability of that particular business or not, the businesses should do something, in terms of social and environmental responsibility. That is another way of looking at corporate social responsibility, and that is one of the key drivers of many organizations who think that whether there is a financial return or not, we must do something for the society and the environment. Risk mitigations, that is another driver what we have discussed. Innovations and sustainability of business. this is very, again, another way of looking at things. Now, one belief is that the future business globally would be driven by the grassroots level innovations, because if we look at the bottom of the pyramid and try to see that what kind of relevance of the present businesses they have to the bottom of the pyramid in terms of the services and products, is that very relevant services and products for that particular segment of the market? Many times we see that not exactly. If we talk in terms of inclusive growth, whether we are creating a pulling factor from the businesses from the top of the pyramid so that the bottom of the pyramid can have the opportunity to participate in the market economy, probably, we see that the increasing disparity is saying against that, right? Because we see that the disparity between the haves and have-nots, the deprived and the privileged, is day by day increasing. So that, we see that the market could not create that pull from, through what actually the bottom of the pyramid will actually participate in the market, and they will also be included in the growth trend. Now, unless and until, and it is actually in many cases we have seen that unless and until at the grassroots level we start innovating the products, we start getting new innovations of innovative businesses, business models, that inclusiveness and their real contributive participation to the broader economy is really very difficult. And if we really want to make our businesses relevant for the bottom of the pyramid, then we'll have to get into those grassroots level innovations which will actually relate the businesses with the real need of the community and at the grassroots. So that the future, as many of these experts, they say that depends on grassroots level innovation and grassroots level entrepreneurship, and how we'll actually create all these micro level innovations and entrepreneurship, and that will actually culminate to a wider set of business, a scalable set of business. That is a future market. So that we see that some of the businesses, they strategically invest in social innovation, social entrepreneurship, and try to see that whether they can be relevant for the future, they can be relevant for the bottom of the pyramid, the business of bottom of the pyramid. Now, stakeholder expectations, we know that, there is another way of looking at corporate social responsibility, that the businesses should be responsive toward the expectations of different diverse set of stakeholders. And it says that, even the expectation when the business is not probably not doing financially great, or probably, apparently it looks like that they are compromising with some of the financial aspects, in long term, the businesses will do much better and sustain if they actually make themselves more relevant to the diverse set of stakeholders. So that investors' money in long term would actually, the investors, the investment from the investors would be more relevant in long term if they make the business more relevant for the diverse set of stakeholders. It may be the community members, it may be the customers, it may be the suppliers, it may be the laborers and employees, so that it is not a compromise with the profitability of that particular business. Rather, it will make the business more profitable in longer term. Now, the another driver, what we have seen, why the businesses are actually getting more and more involved in social aspects, is pressure from media or client, and also the NGOs, the social activism. If you see that another box we have on social activism. So we have seen, even when we are talking about the evolution of corporate social responsibility, we saw that the NGO activism, the media activism, the consumer movements, those are actually a major factor where many of the organizations were influenced by, and they got into the corporate social responsibility. Legal compliance, this is a straightforward case. In India, we see that, to comply with the legal system, you will have to do something. And, whether it makes sense for your business or not, that's a different aspect, but at least to comply with the legal framework, you will have to have some set of activities and invest some kind of money in that particular activity. Development of guidelines and standards. Again, what has happened is that because of this emergence of different frameworks, emergence of different theories, emergence of different ways of looking at corporate social responsibility, or rather the business itself, the concept of business has changed, has gone through a huge change. In that we see that, through these guidance and standards, there is a kind of global expectation to the businesses from the global community that the businesses will have to meet up to some standards, some of the parameters, so that they look much better, they look socially responsible, they look environmentally responsible. So it is a kind of expectation globally, it has been created, and with all good reasons. I think the expectation is created that now we have a standard, we have several global standards, we have different kind of frameworks, and there's a reference point. So now the customers, the different stakeholders, the professionals, the managers, everybody has a referral point, has several referral points to see that where we stand against those standards and parameters. So these standards and parameters have created that kind of referral points, and that has created a drive to really live up to that standard as it is expected through those frameworks. We'll have a little bit of discussion around that later also. Now, if you see the benefits of CSR to key stakeholders, I mean, these are the broad understanding. Again, we are trying to see that, we should have a kind of common agreement to some of these things. So we saw that, there are different kind of expectations. We saw there are different kind of drivers. We saw that there could be financial cases directly, which could be evidential, which are not evidential even. Some are, the things are at a very hypothetical level at this point of time. But broadly, if we see that, what are the broad benefits to different stakeholders of a particular business? Now, to the company, if we take the company as one of the set of the actors who are the managers, the investors. So what they are gaining from this? They are gaining an improved brand image. They might be having customer loyalty. We saw in different cases that how the customer's loyalty is enhanced. We saw that by doing a kind of socially, a campaign against animal testing. One business can actually create a loyal customer segment, and their turnover might increase like anything. Though we'll have to consider there are many other externalities also. But we see that there is a link from social responsibility and the way it is communicated. That is more important probably. With customer loyalty. Employee retention, there are many cases we see that it is not only the business, people at this point of time, especially the new generation, they want to identify themselves to a set of values, which is much beyond and much larger than the business, much larger than the profit itself. Because in large corporations, what we see that there is a kind of alienation. We see that, one particular person, a professional, probably he or she is more, on day-to-day basis, they are more involved with that particular task they will have to, perform every day than the broader company's value. So if we can create that kind of value orientation at each level and try to see that the company's employees are attached and they identify with the core value of the company. It might be the social value, it might be the environmental value, and they relate to that particular cause, the broader cause of that company. And there are evidences, very, very straightforward evidences that the employee retention is much better than the companies who could not create that kind of value orientation in that company. Competitive advantage we have already discussed. Cost savings, we have discussed that there could be different kind of strategies, through what social strategies, through what actually you can influence the cost and price factors. Access to finance. Now, this is another emerging issue, that the investors are now becoming more and more responsible, and they are trying to see that where they would invest. given a case of company A, which is not known for social responsibility and environmental responsibility, and case B, where the company is known for social and environmental responsibility, the global trend is the B company, which is socially and environmentally responsible, they attract more investment than the other kind of organizations. So there is a direct correlation between investment and the social and environmental responsibility performance of that particular company. So that the company will get more investment as a benefit if they are, socially and environmentally responsibility. Again, in all these cases, because in many of these cases, it depends that how do you communicate your good work, how do you really create that kind of value orientation across your different stakeholder segments. Good community relationship, this is obvious. Better stakeholder management, as we have discussed, that there are a set of different kind of benefits. And innovation, as we said, that grassroots level innovation and entrepreneurship is probably the lifeline for the next generation business. Because if we see that, today's market is relevant for probably a very small portion of the global community. Yep. So if we really want to sustain, and this particular segment is getting crowded, right? So tomorrow you'll have to expand. Tomorrow the businesses will have to reach out to the untapped population. It is not only for business sustainability, but also to respond to the need and the reality of the larger population, so that the future business will depend on the micro level, the grassroots level innovation, grassroots level entrepreneurship, and we'll have to see that how we can aggregate all these innovations and small entrepreneurship, micro entrepreneurship, or scale it up at a larger scale to build up bigger businesses. Now, if we look at the right hand side, the investors, we have already discussed that maximize the social impact of their investment, reducing non-financial risk. Now, it has been identified already that the social and environmental risks are really really important factor in making a decision to invest in a particular company. So that in long term or in a short term, a particular company, for example, in India and abroad, you have thousands of companies which has problem in governance. Probably the company was making huge profit. In India, you have, different examples you can actually think of. I'm not taking the names in this session. But if you see that, if you take example of a problem in the governance, corruption, even if the company is very, very profitable, their annual reports were excellent, the balance sheets were excellent, but at the same time, at some point of time, there was a kind of collapse of that company, and the investors who had put in their, hard-earned money to that company, they had really a kind of, got into an adverse situation. So definitely, the investors are now more careful to invest in more responsible companies, better infrastructure and welfare facilities. I mean, if you look at the employee segment, definitely, as we said that, corporate social responsibility, the framework right now, we are discussing the broader framework of business responsibility. We are not getting into the community relationship and social relationship only. That we will be getting into later, because let us see what is the global trend, because if you really want to, live at the level of the global standards, then you will have to have a comprehensive view. So that at this point of time, we are discussing the broader framework of business responsibility. We will get into a narrower perspective when we will discuss the national level perspective and national level, the legal frameworks and other things. Now, better infrastructure and welfare, the principle is that if a particular business is not responsible to their employees, they cannot be responsible to the external community or the society or anybody else. So that for the employees, the benefit would be a better facility, better safeguards, better infrastructure, better working condition, better labor condition. So those are the things, and definitely in return, the company will actually get more loyal staff members, more motivated staff members, more productive labor force, and that way actually they can enhance their business and interests. Community, as you can see, that improved quality of life as a business is actually, first of all, the business is creating, if it is a you know, two aspects we broadly discussed last time is that we'll have to look at the product and the services of the business, and then we'll have to look at the process of the business. Now, either the business, and in both cases, what happens is that the business is giving you a good product and service which is relevant, which is responsible. They have the stewardship of that. For example, if they are manufacturing battery, they take care of the toxic material of the battery throughout the life cycle of the battery. So that is a kind of stewardship of the product. At the same time, we'll have to see that what kind of process they have followed to do that business. Whether it is an exploitative, there is a kind of labor exploitation, there is child labor in the process, there are different kind of corruption in the process or not. So that we'll have to look at both the process level and the product level. To community, I would say that in both cases, the community might be the gainer. One is that by getting relevant good products and services from the businesses, that is the primary purpose of a business, and you know that really explains the existence of any business, that they are relevant for the society. And that is why we'll have to question that the businesses are relevant for what population? Is that the 30% of population or the 70% of the population? So, you know, that is what we'll have to get back to the social innovation part, the bottom of the pyramid, you know, model of business and all these kind of things. Now, the other part is that through the process, you know, they are creating income, they are generating business, they are generating employment. Through that, primarily also the community is getting benefited. But at the same time, by doing the philanthropic and other kind of corporate social responsibilities, definitely the businesses will get you know, benefit from the business. The community will get benefit from the businesses. Now, I'm actually going a little fast because there are too many things today we'll have to really discuss on. Otherwise, we cannot we cannot cover the whole content what we have for today. The CSR, you know, in different areas, we have already discussed this in environmental, workplaces, marketplaces, community, and in terms of governance. What are the different aspects? We have discussed a little bit about this, you know, during our discussions before. But you know, just to run through this. At workplace, what we see the workforce diversity, so that, you know, when we talk about inclusiveness, we see that how we actually include different kind of we give, you know, create opportunity for different people at different, you know, social segments and social strata to participate in the workforce of our companies. Employee volunteerism, that we can create equal opportunity, better work environment, work-life balance, health, safety, etc., etc. In terms of marketplace, we see that responsible advertisement and marketing, you know, you might actually agree with me that, you know, most of the, at least many of the advertisements in the TV and other medias, we see that, you know, probably that does not reflect the real fact, and a lot of, you know, manipulation of presenting the facts we use, and, you know, we sometimes promote the products which are not so responsible. Promoting social responsibility in the value chain, safe products, responsible procurement, you know, those are in the marketplace. So that procurement, I mean, it's very easy that, you know, it is not about your core business, it is about the whole supply chain, and more is, you know, broadly, it is actually about the value chain you will have to consider. Environmentally, we talked about the protection of the environment, biodiversity, restoration of natural habitat, sustainable resources, you know, use of sustainable resources, prevention of pollution at community level, community involvement and development, employment creation and skill generations. At governance, the core governance level of the business, regulatory compliance, stakeholder engagement, anti-corruption measures and ethical practices. This is the good governance. One thing, you know, we must at least, you know, think about that if there is a problem in the governance with a particular company, then definitely that company cannot be a responsible business. I mean, simplistically, we can say that good governance is a core element of business responsibility. That we must first accept. That if there is no good governance in a particular company, they cannot be socially responsible, they cannot be financially responsible, they cannot be environmentally responsible. Now, with that, I would request you today, probably let's take around 7 minutes break. We'll come back at 12 o'clock, another 45 minutes of discussion we'll have, and then for 15 minutes we'll have a question answer session. Today I will have to go a little fast. If you have any question and answer questions, and afterthought of after the session, you may always write to me. I will actually at end of the session I will share my email ID to all of you, with all of you, so that you can after the session also you can write back to me, and we can I can respond to your queries and questions. So thank you. We'll get back at exactly 12 o'clock. Thank you so much. There's a switch to
Muted. Unmuted.
Okay, welcome back. I hope all of you are again back to the session. So what we'll do is that we have 45 minutes. Now we'll have to save good amount of time for the national mandate, I mean the Companies Act, and then I will save 15 minutes for the question answer session. And before that, what we'll do is that I will go through the international guidelines and the frameworks, guidelines and the standards very quickly, so that we have at least say 30-35 minutes for to discuss on the Companies Act. Yeah, because I see that a lot of questions around that. In the last session also, even today I saw a couple of questions are there, so that let us have a discussion on that, then probably we'll get into those questions and see that whether those are addressed in my session, or I will answer those questions separately. So that very quickly what I'll do is that I'll go through some of the international frameworks and guidelines. Now, international accountability standards, what we call international accountability standards in terms of social and environmental accountability. These are the standards to set standards and parameters for the businesses, which gives a referral point. There could be different kind of parameters for different purposes. We'll get into that discussions. Now, definitely it intends to encourage and guide corporate responsibility, provide ways to assess, measure and communicate organization's social and environmental performance. So that, one thing definitely through these standards, you can see that why do you stand against those standards and parameters. These standards and parameters are very useful to really express your performance, to communicate your performance, because if your audience, they don't have a referral point to measure whether you are doing good or bad in comparison to others, then it would have been really difficult. So that these standards and guidelines are also very important, that through that you can actually communicate your performance in a more effective and objective manner. Now, there are four types of international accountability standards. The first set is principle based, broadly defined principles with, sorry, there is a mistake, spelling mistake. This would be principle, PLE. Extremely sorry about that. Now, this principle-based frameworks, what they are doing is that broadly defined principles with regard to social and environmental problems used as a guideline for action and starting point for dialogue. So it is giving you a set of principles. Through that you can see broadly that how you would set your business direction and strategically broadly. The second part is the certification base. We see that several international organizations, and there are set of standards which are actually assessing, which will do an audit and assessment of your performance against a set of standards and parameters, and they will certify your performance. And it's a kind of validation. They will say that what you are saying you are doing, or it's a kind of third party validation, and they are saying that at what level you are performing in terms of non-financial performances, social or environmental performances. Now, process based. In this case, what we are doing is that it focuses on the question of how corporate accountability can be achieved. It offers essentially managerial guidance on how corporate accountability can be achieved, so that it is actually a guiding a process that through what process you will be going. So it is not assessing your performance. It is not intended to give you a broad principles, but it is actually defining the process and supporting you through the process to become more socially and environmentally responsible. And the fourth set of standards are reporting standards. We know that the most probably popular framework is the GRI framework, Global Reporting Initiative Framework, a comprehensive and standardized framework for economic, social and environmental reporting. This is basically to give you a framework and a set of parameters against that you can disclose your non-financial performance or social and environmental performances. Now, there are some of the examples of the principle-based frameworks. One is that United Nations initiative to encourage business worldwide to adapt sustainability. This is in the Global Compact. We know that there are a set of principles. Against that, what they are saying that we'll have to actually align our activities and contribute toward the set of parameters. It has a set of indicators it has created globally, and then it is disaggregated at a national level based on the 10 principles of the Global Compact Global Compact framework. We'll actually get into the Global Compact framework later when we'll be discussing about different sectors like education, health, livelihood, etc. And we'll try to see that how this Global Compact framework, against the Global Compact framework, we stand at an at a national level in India. Now, OECD principles, we see that these are the recommendations providing principles and standards for responsible business conduct for multinational corporation. This is Organization for Economic Cooperation and Development, OECD. And these guidelines are legally non-binding and cover business ethics on employment. These are the elements there, in OECD principles broadly: employment, human rights, environment, information disclosure, combating bribery, consumer interests, science and technology, competition, taxation, etc. So, especially this OECD is giving the principles to the business who have transnational or international operations. Then we have CII principles. CII is the Coalition for Environmentally Responsible Economies, CERES. This is a Boston-based organization, non-governmental organization, non-profit organization. It's one of the most very influential organization in terms of sustainability. So they have again a 10-point code of corporate environmental ideals to be publicly endorsed by companies as an environmental mission statement or ethics. The 10 CII principles are protection of the biosphere, sustainable use of natural resources, reduction and disposal of wastes, energy conservation, risk reduction, safe products and services, environmental restoration, informing the public, that is the disclosure, management commitment, audit and reports. These are the 10 principles. Based on that, actually so we see these are the 3 good examples of principle based. So they are not saying that this is what you will have to. They are not mandating anything. What they are doing is that they are actually putting some principles in front of you to see that you believe on those principles, and probably you can restructure your business strategy or redirect your business strategy or realign your business strategy based on these broad principles, and probably through that globally we can have more responsible business practices. Now, there are set of certification based. We know that SA 8000, these are something very popular frameworks. SA 8000 is an auditable certification standard. So any certification standards means there would be a set of audit based on a set of standards. Sometimes it would be a self-disclosure model, so that you assess yourself first, and then probably the external auditors will assess you and validate your assessment, or sometimes it would be a directly third-party assessment. Now, SA 8000 is an auditable certification standard that encourages organizations to develop, maintain and apply socially acceptable practices in the workplace. It measures the performance of companies in 8 areas important to social accountability in the workplace. What are the 8 areas? Child labor, forced labor, health and safety, free association and collective bargaining, discrimination, disciplinary practices, working hours and compensation. These are the broad areas of SA 8000. We also familiar with the name of ISO 14001. So this is also another core set of standards used by organizations for designing and implementing an effective environmental management system. So the first one, SA 8000, was more on the workplace. ISO 14001 is that more of environmental management system. It maps out a framework that a company or organization can follow to set up an effective environmental management system. Now, Fair Labor Association, by the name you can see that the focus is on labor aspects. Companies that join the Fair Labor Association commit to upholding the FLA Workplace Code of Conduct, which is based on International Labor Organization standards. It is based on the ILO standards, and to establish internal systems for monitoring workplace conditions and maintaining code standards throughout the supply chains. So it is not only within your organization, it is about the entire supply chain of your organization. The FLA conducts independent and unannounced audit. So these are all surprise audits they will be conducting of the factories used by FLA affiliates to evaluate compliance of all code elements and verify companies' internal compliance efforts. Accreditation by the Fair Labor Association is the most advanced recognition of companies' labor compliance program. Now, the obvious question, if you see against these standards, through this perspective of the principle-based standard, the certification-based standards, and even the process-based standards, you will see that these parameters are much more, much broader than the national mandate, than the mandate, created through the Companies Act 2013. So that, when we are talking about the social standards, we are talking about the social responsibility and business responsibility frameworks globally, then we need to understand that this is a much broader and comprehensive concept aspect than as it is defined in the Companies Act. So we get into the Companies Act, and probably we will get into more discussion about that. But at the same time, try to understand that these standards, global standards and parameters, are actually the much broader than those. So that you can, when we discuss the Companies Act, probably you will have to see that Companies Act have a critical view of Companies Act with this perspective, the broader perspective, and try to see that what are the limitations, scopes, and opportunities of the Companies Act, Section 135 of the Companies Act. Now, if you see that accountability AA 1000 series are principle-based standards, so now we are getting into the process-based. These are process-based standards rather, to help organizations become more accountable, responsible, and sustainable. They address issues affecting governance, business models, and organizational strategy, as well as providing operational guidance on sustainability assurance and stakeholder engagement. ISO 26000, again, ISO 26000 is not a framework for assessment or audit, or it is not giving you standards to follow. But it is a guiding principle. It is a guiding the process of that, so that it is based on this. You should not, this is ISO 26000 was not created as a tool for assessing any performance of any company or doing an audit. So ISO 26000 offers guidelines on socially responsible behavior and possible actions. The 7 key principles advocated as the roots of socially responsible behavior are accountability, transparency, ethical behavior, respect for stakeholder interest. Stakeholders are individual, you know what stakeholder by this time, respect for the rules of law, respect for international norms of behavior, respect for human rights. Now again, if you look at the parameters and the mandates created in the Companies Act against ISO 26000 or AA 1000 or any other standards, you will see that there is a huge difference of the perspective. And probably the Companies Act is giving a very narrower perspective in comparison to these broader standards and frameworks established at a international level. Now the reporting standards, as you know, the name of Global Reporting Initiative, GRI. So GRI is actually giving you a comprehensive framework. Now in the recent framework of the GRI, it is talking about the value chain and materiality. Those are the 2 aspects, so that you will have to be more objective on when you are reporting, and you will have to actually take account of the whole value chain. It is not about your supply chain. You will have to map your value chain and see that what are the values and where are the values you are creating, and you will have to take account of the entire value chain when actually you are reporting against the Global Reporting Initiative framework. Incidentally, I am also a member of that International Stakeholder Committee. CII, as we discussed, that we discussed their standards. Now we see that there's a principle-based standard they have, and also this is a reporting mechanism they have. The CII Facility Reporting Projects Guidance is a tool of support facilities and their parent organizations in voluntary public reporting of facility level sustainability. So the CERES has also have a reporting framework, and it is actually guiding you for facility level sustainability performance. It consists of environmental, social and economic indicator relevant to local stakeholders and provides step-by-step guidance to assist in the reporting process. Then there is another greenhouse gas protocol. I'm not getting into this discussion because we have left with just 30 minutes to discuss on this. So we have, as we discussed, that we have four broad kind of frameworks. What we said, that principle-based framework, certification-based framework, process-based framework, and reporting standard-based framework. We discussed the principle-based framework, Global Compact, OECD, the CERES principles. These are actually giving the broad principles against what what will guide you. Those are the guiding principle for any business to be socially and environmentally responsible. The certification based, it is through a third-party audit or validation. Actually, they will be doing a certification and they will assess your performance in terms of social and environmental performances and try to see, and will also endorse your performances against their parameters. The process based is more of actually what kind of process will lead to a more socially and responsibly business. So in that we see that these are again guiding principles. These are not really actually compliance standards or audit standards. So that in that you have accountability, ISO 26000. These are the standards will guide your process to a more socially and environmentally responsible performance. Then you have that reporting standards, you have GRI, you have CERES, you have greenhouse gas protocol. These are the frameworks what will actually help you to articulate your performance to the audience in terms of social and environmental performances. Now the new trend, and it is actually a very, very significant development, is the integrated reporting. So that this particular framework, what it is saying, that it is that you cannot have separate out your social and environmental performances. It has to be integrated with your core business reporting, so that it is an integrated reporting in terms of, and there is a scope, especially for the investors, try to see that how to correlate between the financial performance and social and environmental responsibility performances. So that if we just in this particular case, this is a new trend, and this is something really I would say that this particular this particular framework is more recognized by the investor communities, because they can actually see the investment, the business financial performances in comparison to social and environmental comparison. So definitely it will be relevant for many other stakeholders, but primarily I would say that for the investors it's a great tool to have put all the parameters in an integrated manner. Again, if you look at this trend, this global trend, and if you look at the CSR trend in India, we are trying to, in this particular trend, we are trying to integrate and really encompass all kind of performances of a business in comprehensive manner. But in Indian scenario, through the corporate social, through the Companies Act, what we are trying to do is that we are trying to actually disconnect between social performances and the financial performances, even in reporting formats. Anyway, so the global trend towards integrated reporting, it integrates environmental, social, governance performance along with financial informations, mandated in South Africa long back, and recently in April, I think, this was mandated at the European Union level, so that all European companies of a particular category, they will have to disclose their non-financial performance. That means the social and environmental performance also. So that what they will do, they are not mandating. In contrary to India, what they're mandating is that you will have to disclose your performance in terms of social and environmental parameters. With that, we will get into the Companies Act 2013. Before getting into the Companies Act, as in the first session also we have discussed that in 2009, if you see how the Companies Act came to the scenario, I mean, before that, historically, if you look at the evolution, the first actually, it's a kind of reverse evolution to me. I would say, unfortunately, because first in 2009, the kind of guidance, if you see that globally, it's more of a guidance that what you do. It's more principle based. It is giving, and if you get back to the definitions we have discussed, it is saying that primarily it is voluntarily. It should not be mandated. It should be driven by business interest. It should be driven by the stakeholders. It should be driven by the market economy. It is not mandated or under compulsion, which might not be relevant for the business. Anybody should get into the corporate social responsibility. That is the kind of global and broad framework. So based on that, in 2009 in India, we had developed a business responsibility framework that used to be called National Voluntary Guideline for Business Responsibility. That was also published by the Ministry of Corporate Affairs, and at a later stage, SEBI, based on this framework, had made mandate the disclosure of first 100 companies, top 100 companies, mandated the disclosure. They make mandated for the first top businesses. So what are the elements in this particular National Voluntary Guideline we had? We used to call it business responsibility. We didn't call it corporate social responsibility. It was a voluntary guideline. It was not mandated, and it was a principle-based framework. In this, we have talked about ethics, transparency, accountability. We talked about product life cycle and sustainability. We talked about employee well-being. We talked about stakeholder engagement. We talked about human rights. We talked about environment. We talked about policy advocacy. We talked about inclusive growth. We talked about customer case and values. So that we are talking about business responsibility is not about how do you relate with the community, or how do you relate with a particular segment of the diverse set of your stakeholders. It was more holistic. It was more comprehensive, and it was about responsible business or business responsibility, not only about social responsibility, or not only about rather how do you react or engage with the community, and more importantly, it was voluntary guideline. It was not mandated. However, after 2009, we know that in 2013 the government of India, they decided that they want to mandate corporate social responsibility through legislative framework, and in 2013 Companies Act, under section 135, these companies, it's mandating corporate social responsibility for certain category of companies. Now, this is a picture of investment. If you see that we are estimating around 9,000 eligible companies. Yeah. Out of these 9,000 companies, only 200 companies, the big companies, they will contribute 33% of the total amount this year we are expecting, which would be invested in corporate social responsibility at a national level. If you get all the companies together, all the investment together, 33% of the total investment at the national level will be made by only 200 companies. So these 200 companies, if you see that out of 9,000 companies, it's a very, very small portion. The other 8,800 companies will make 67% of the investment. Now with this trend, you can see that these 8,800 companies, out of these 8,800 companies, there will be many small companies, there will be some SMEs, and these particular SMEs probably will have very small ticket size, so that this will be very distributed very thinly, this investment. So most of these, to my estimation, I think 60 to 70% of these 8,800 companies would be small and medium companies, and their investment size would be so small that sometimes we'll have to think about that with that kind of small amount of money, what kind of sustainable and scalable impact they can create. So that that is one challenge, and probably as the business federation like corporate CII and other platforms, or organizations like CSR partners, this is a challenge to us, that how we can create those opportunities for the small and medium organizations, so that with their small amount of money also they can create something impactful program. Because whether you like it or not, this is something mandated, so that they will have to spend that particular amount of money based on that particular framework given by this Companies Act. Now, in social sector, if you see, what would be the impact of this particular investment? Now, the total size of the foreign fund, broadly, I mean, it is not exact accurate amount is very difficult. This is an estimated amount, but this would be, close to accuracy. Would be around, say, 100,000 million rupees. Yeah. So that the CSR fund this year, what we are estimating is around 180,000 million rupees, right? So that we see that it is the total foreign funding to the NGO sector, the social sector in India was 100,000, and total CSR funding this year, what we are expecting in the first year of after this Companies Act came into place, is 180,000. So it is almost like double of the foreign funding. So the total investment in the social sector would be increased significantly, so that even the social sector, we will have to see that what is the capacity of the social sector, and we'll have to really see that how do we enhance the capacity of the social sector. They can absorb this kind of increase of investment and use it meaningfully and create more impactful programs. With that, let us get into the provisions of the Companies Act, starting with the applicability. As we know, probably all of us, that the companies who will fall into this the mandate is net worth of rupees, who are having net worth of rupees 500 crore or more, turnover of rupees 1,000 crore or more, net profit of rupees 5 crore or more. So that any company who falls into any of these categories, they will have to mandate a particular amount of money they will have to invest a particular amount of money in corporate social responsibility, and that money is 2% of their net profit. So that net worth of rupees 500 crore or more, turnover of rupees 1,000 crore or more, and net profit of rupees 5 crore or more. So any of these categories, anybody is falling into, they will come under the purview of this particular section 135 of Companies Act. It will also apply to foreign companies registered in India. Net profit will not include dividend income received from another Indian company following the provisions of the company's law, or from profits of its own overseas branches. Now, as per the CSR provision of the Companies Act, eligible companies need to constitute a CSR committee, at least 3 directors, of which this is the governance, part of that corporate social responsibility, section 135. What we see, what they are saying is that the eligible companies, whoever is falling under those, any of those 3 criteria, what they will have to do is first constitute a CSR committee of at least 3 directors, of which one should be an independent director. Now, this is very significant. One of these committee members would be an independent directors. And we, in this particular structure, what they are trying to ensure that, one independent point of view is there, so that there is a, that particular director will represent the, diverse set of stakeholders' interest and views probably in that particular company, particular committee. Establish a CSR policy indicating a list of activities along with the expenditure and publish the same, so that you will have to have a policy, and it is not a broad policy. You will have to have program and activities, and against that what kind of budget you are allocating. We'll get into that framework also. Then spend at least 2% of average net profit during the 3 immediately preceding financial years. Report CSR activities. So again, you will have to disclose what are the activities you have done against the plan and the policy you have submitted, and against the budget you have submitted, how much expenditure you have incurred. So 3 things we see broadly. One is that there is a governance element there. Second thing, there is a policy element is there. Third thing, there is a budgetary elements, and fourth is a disclosure element. So that these are the four broad elements we find in the Companies Act section 135. Now, if you look at the CSR governance, again, I'm going back to that, getting little detail on that. You see that what we said, CSR committee consisting of 3 or more directors, out of which at least one director shall be an independent director. In case of unlisted public companies or private companies can have a committee without such an independent director, because they will not have any independent director. A private company having only 2 directors on its board shall constitute its committee with 2 such directors. So if you don't have 3 directors, a private company, then they definitely will have, whatever the available number of directors they have. That is, at least 2. For foreign companies, committee should have at least 2 persons. One, resident in India authorized to accept on behalf of the company, service or process any notice or other documents required to be served on the company. So that one person who is authorized formally and legally, who can accept on behalf of the company any notice or the document, any formal kind of document, notice, etc. On behalf of the company, who is a resident of India, right? So that that person is available for any legal or formal transactions or interactions or communications. The second person that would be nominated by the foreign company. Yeah, so these are the at least two people would be constituting the CSR committee in case of the foreign company. Now, if you look at the role of CSR committee and the board. Now, let us first actually start with the right hand side, the board's role. If you see that the board, first of all, so how the CSR committee would be developed. The CSR committee would be developed in a full-fledged board meeting. These 3 persons, or at least 3 persons would be actually nominated or selected or elected by the board to get into the CSR committee. Now, the second board's role is that they will approve the CSR policy. Again, the CSR policy is, or the plans are not, a document which is done by the foundation of the company or the CSR department of the company or some, HR department of the company. But this document is actually, the onus will lie with the board, because the board is approving this particular document. So till now, voluntarily, whoever were actually doing the corporate social responsibilities and the plans and documents and other things, in most of the cases, the board didn't approve it formally. But this particular document, be it the plan, be it the reporting, be it the disclosure, be it the budget, everything has to be approved by the board, so that the onus, primary onus lies with the board. The board will also ensure that spending of at least 2% of average net profit during the 3 immediately preceding financial years. If not, specify the reasons for not spending the amount, so that it is either comply or to explain. Either you will have to comply of spending 2% of your net profit, or you'll have to explain why you could not spend that particular amount of money, in that year. But one thing, later I will again discuss that, I will mention that, but one thing, that the unspent money cannot be reversed back to the business or anywhere else. That has to be reserved for the purpose of corporate social responsibility in a corpus fund only, so that the unspent amount is not going anywhere else, but it will actually remain there as an unspent amount with any interest or any other income earned by that particular amount of money, and that has to be included in the next plan cycle. Ensure that the activities as are included in CSR policy of the companies are undertaken by the company. Now, the board is also responsible to see that you have already declared, disclosed and approved the policy of the company in terms of corporate social responsibility, and to make sure that the activities are performed against that, so that it is being really practiced. It is not only the policy. So the board is directly responsible to make sure that the activities what are planned in the policy document are also performed. Now, the board, as we said, that will constitute the CSR committee. The first role of the CSR committee is formulate and recommend a CSR policy. First role of the CSR committee is to formulate and recommend a CSR policy. So the first thing what they are doing is that in consultation or with the foundation, probably with consultation with the CSR professionals, in different stakeholders, whatever the process, they would develop the draft CSR policy, and they will actually, put it to the board for their approval, and the board with their recommendations, review, revise, whatever the revisions they make and all, they will approve the policy. The second major role of the CSR committee is recommend activities and amount of expenditure to be incurred. Now, please remember that these activities and the budgets against each of these activities has to be included in the policy document itself, so that when the CSR committee is developing the policy, it is not a set of principles, but it is actually about specific activities and respective budget they are planning. Third thing, the committee is not that only they will plan and they will have a policy and the plan, but they will have to be involved in monitoring the policy from time to time and make sure that the activities are being performed. So that the CSR committee will have quite a bit of hands-on role, and if it is not a liability to the committee members, it's a huge accountability and responsibility will be entrusted on these committee members. So that we will have to make sure that we have the right kind of persons who have a natural interest, natural inclination, and also right kind of knowledge, understanding about corporate social responsibilities, and they have, more importantly, probably practically, they have time to devote in that, because it will take a little bit of time. It is quite a bit of hands-on responsibility, they have entrusted on the CSR committee. So that we looked at this is a kind of broad, governance structure. We saw the role of the board, we saw the CSR committee's role. Now, we talked about the CSR policy. So what are the broad elements? What are the elements in the CSR policy? A list of CSR program projects with the company plans to undertake, specifying modalities of execution and implementation schedule for the same. Now, you see, quite a bit of detailing is required. It is not a set of principles or objectives or strategies, generally what we actually put in a policy framework, but it is talking about specific program, projects, activities, and also the modalities of execution. How do you want to execute that? Do you want to execute that through your foundation? Do you want to execute that through any NGO? Who is that NGO? You will have to mention. What amount of money will you be spending for that particular activity or the particular project? So all detailing is required in these particular policies, so that before you start your activities, you will have to disclose the policy. The committee, in consultation with whoever it is within the company and the stakeholders, they will develop this policy, and the board will approve this policy. So we will have to be very, very clear. Before that, you see, a long process is required even to plan your activities. It is not a boardroom exercise, so that you will have to have the understanding, and clearly you will have to see that what are the activities you will be doing in the next year, in the running year, and also try to see that how much budget. So that it's quite a bit of detailed exercise you will have to do to formulate the policy. Now, second thing is that monitoring process for the program and the project. So that is also to be mentioned in the policy, that what would be the monitoring mechanism we will be having in place for the projects and the programs. The third part is it should also specify that the surplus arising out of the CSR activities shall not form part of the business profit. This is a kind of declaration you will have to make, and this is a specific standard declaration you will have to make in all the policies, all the companies, that any surplus or any income generated out of your CSR activities, or the budget you spend or budget you create in the corpus fund, will not form a part of the business profit. So it will not go back to your business. So what are the examples of this kind of how you can generate surplus? One is that definitely it might be interest, it might be a microfinance program, it could be a kind of social entrepreneurship program what you are supporting. Through that you can generate a little bit of that particular entrepreneurship enterprise can develop little bit of surplus and profit, but that does not come back to your business. That might remain with that social entrepreneur or the microfinance organization or in your corpus fund, and that will actually be accumulated at whatever the level it is being saved at, reserved at, for the next round of activities, so that it never comes back to the business. It will be accumulated for the specified activities in the corpus fund or at the agency level where you have involved a third party organization to implement the program. Now, what about the targeting? That where actually we do the program? As per the Act, what it is saying, the companies shall give preference to the local area and areas around it where it operates for spending the amount earmarked for CSR activities. CSR activities will have to be within India. CSR projects, programs that benefits only the employee and their families will not be considered. Now, one of the questions I saw during the break that somebody is asking that, that employee well-being is not part of the Companies Act. Yeah, definitely, this particular provision is not permitting you to do employee well-being as a part of your corporate social responsibility. If you are doing it, definitely you should do, you must do, and everybody does that to varied extent. But as per this act, you cannot call it a corporate social responsibility. As per the global framework, it is definitely a core element of your corporate social responsibility. The principle is that if you are not taking care of your employees, then definitely, and you are doing something great work even in the community or somewhere else, then, whether we should call you a socially responsible business. For example, a particular company having number of contractual laborers who are working in an inhuman condition and who are living in an inhuman condition, but they are doing something really fancy work in the community, would you really consider them a socially responsible business or not? So the global framework is saying that, employee well-being is a core element of your corporate social responsibility, but in the Companies Act, it is not considered as a part of the corporate social responsibility. So that, whatever the 2% amount of your net profit you will be spending, you cannot spend anything primarily for your employees' well-being. Now, the contribution to the political party, this is very obvious, and we had several examples in past years that we saw that somehow directly, indirectly, there were some kind of political patronage by the CSR activities, CSR fund, and in this particular act, they have taken a safeguard and they are saying that contribution to any political party, directly or indirectly, will not be considered as CSR activity. Now, how do you implement this program? There are 4 options. 1, a registered trust, society or company established by the company or its holding or subsidiary or associated company. So it's a kind of foundation. Yeah, you can create, or your subsidiary companies also can create, or associate companies can create a foundation, and you can actually go through them so that you can give the CSR money to them and develop your CSR plans with them. So they would be your implementation hand, the particular organization you create through these registered under this trust, society or company. These are all non-profit organizations you'll have to create as a foundation. Otherwise, you can actually go through an external NGO or a number of NGOs that has, or that would have an established track record of 3 years in undertaking similar programs or projects. So in terms of your fund, if you in your foundation, if you are creating your foundation, it is not mandatory that the foundation will have to have a track record of 3 years, because this is your own extended arm. But when you are going to an external agency, an NGO, that particular NGO should have a 3 years of track record in that particular kind of activities, in implementing or managing that kind of activities. Now, legally and formally, relationship-wise, these two are the same. The foundation is, even if it is an extended arm in real sense, legally it is an external organization, and it is, as good or as bad as an NGO or a different a separate non-profit organization, because legally these are two different entities, the foundation and the companies. NGO is also like that, a separate entity, so that while you are actually having the relationship between these two, you will have to see that you actually have this almost the same kind of terms and conditions, but the foundation would be little bit of closely held, and the other organization would have their independence, and they might have, in both the cases, in fact, they would be open to partner with other corporates also. So a particular foundation, like any other NGOs, they can actually partner with any other companies, any other corporates, and they can be an external NGO, or the role of an NGO they can play for any other companies to implement the CSR program. The company has specified the modalities of fund utilization, monitoring and reporting mechanism. So, you will have to specify the modalities of the fund utilization, monitoring and reporting mechanism. May also collaborate with, see, the third part is that, what you can do is, you can have a CSR, you can have a CSR, department, and through that you can, definitely implement your program, your own CSR department. So you don't have to be, or, a number of group of people. You can have a kind of, structure within the structures. It might not be a separate CSR department also. It could be a part of HR department. Many other companies are managing like that, but it should be, as you can see, a lot of responsibility. It should be more specified, and delegation should be clearly done, so that at the end of the day there are people who are specifically responsible to carry on this particular responsibility. Now we saw that through foundation, through external NGOs and external agencies, NGOs, and through your own CSR department and your own staff, you can implement the program. And also it is possible that in collaboration with other corporate, if you don't want to create all these capacities, and you see that it is easier that some other company, your peer companies, your somebody in the value chain is doing great job, and you see that you can actually complement that, you can collaborate with them, you can join their initiative and complement that particular work what they're doing, you are most welcome to do that. The company's act allows you to do that, but you will have to specify your contribution and your impact in that, your result in that program, so that even if it is NGO's program, they might have a bigger program, the corporate might have a bigger program. So you cannot claim that the whole program you are creating, or the result out of the whole program is your achievement. You will have to proportionate your investment and specify the result created by your investment, by the activities you specified in the policy. Now we are going little late today, so what we'll do is that let me complete all these things, the different aspects of the Companies Act. If we have time today, we'll have the question answer sessions. Otherwise, I will note down the questions today, and I will, in the next session, I will start with answering the questions, and then we'll get into the discussion. So the disclosure, elements in the Companies Act, what are they? Display CSR activities on the website, so that it has to be in your public domain. Annual report on CSR. So your CSR expenditure, in any case, that has to be a part of your annual report, because expenditure wise 2% of your net income you are actually separating out of your fund, and then so that it should be part of your annual report also. At the same time, you will have to have an annual report on corporate social responsibility. The format of that particular annual report, and it has to be also submitted, it has to be displayed and submitted to the register of the company. A brief outline of the CSR policy. So that policy you have already disclosed in the beginning. CSR committee composition, so you'll have to disclose who are there in the committee, who are that independent director. Average net profit for the last 3 financial years, that you will have to do. So you'll have to see that on what basis you have calculated the total budget, what you are allocating for the corporate social responsibility for this particular year. Prescribed CSR expenditure, against which activity, what are the expenses you have incurred, against what budget. So in the policy, you remember that you had actually prescribed certain amount, allocated certain amount of budget against each of the activities. So now when you are reporting, you will have to really see that how much expenses you have incurred against each of these allocated budget. Details of CSR spending during the financial year, that we have said, total amount to be spent, amount unspent, if any amount spent, so that even you will have to see that how much amount was unspent against the planning or budgeting. What more, in case the company has failed to spend 2% on CSR, provide reasons for the same. Now in this particular thing, there is a provision, and it is done very, very purposefully, that practically we know that if you really want to make good use of 2% of this money, and if it is a good amount of money, it might be difficult for the first year, it might be for some unknown circumstances your plan cannot be implemented, so that you will be left with some of the money with all good intentions. So that there is a provision that you can explain, you comply or explain, so that you definitely don't have to forcefully spend the money or waste the money for the sake of spending money and reporting. If you have a good reason for not spending the money, I think that is something really acceptable, and I think that is something understandable, and that should be explained in the report, and please do that. I think it is much better than wasting money in a hurried manner, in a rush, to just, for the reporting sake. But one thing, the board has to actually approve this report also, so that they will have to sign on this report. So, please mind that first of all, you will have to explain to your board that why you could not spend that money, and it should be a good logic and reason. A responsibility statement of the CSR committee. This is very, very important. As I was saying, that it is not legal liability, but it is a huge amount of accountability to the CSR committee. A responsibility statement of the CSR committee that the implementation and monitoring of CSR policy is in compliance with CSR objectives and policy of the company. So that responsibility statement given by those 3 board members, one of them would be an independent director, they are saying that the implementation and monitoring of CSR policy is in compliance with CSR objectives and policy of the company. And the report to be signed by CEO or the MD or the director of the company, chairman of CSR committee, person specified under clause D of subsection 1 of section 380 of that act, wherever applicable, those foreign companies and all these things, they have as the governance structure is prescribed, they will be signing that. So that it is not, again, I am saying that the ultimate responsibility and accountability lies on the board of the company. It is not, about the foundation, the NGO, or the other companies through whom you are actually doing the CSR activities, or a number of managers, CSR managers. End of the day, the onus lies with the board. Now, this is the reporting format. What we have explained already, that CSC projects, if you take the extreme left column, CSR project activities identified. So, what you have planned in the policy also. These are the activities in different rows. You have to mention different activities on the projects. Then in the sector in which the project is covered, I will get into that. Schedule 7 is actually mentioning about all these activities that, what you can do. Project program, local areas, states. So in this particular thing, you'll have to mention where exactly you are implementing the program. Project program wise budget, amount outlay, so that, that you'll have to say. Next column is that against that budget, what amount of money you have spent. In that, 2 different things you will have to say, that what are the direct expenses, what are the overheads, so that how much of program money directly you are spending, how much overhead spending is there. There is no stipulation at this point of time, but you'll have to disclose, so that, when you are disclosing, if you are showing that 60% of the budget was actually overhead expenditure, definitely that's not a healthy expenses, so you'll have to really be careful about that, and that is not in any case an efficient program, right? Cumulative expenditure up to the reporting period, so that for last 5 years you have having an education program, so it is not that every year you give disconnected and separate amount for that particular year. You will have to give with that particular annual expenditure, you will have to give the cumulative expenditure till that date for that particular activity if you have done. So that for last 5 years how much money you have spent, and for last 1 year how much money you have spent for that particular program, so that any stakeholder who is reading the report, they will know that it is not that 500 rupees in this particular year they have spent. For last 5 years they have been spending 5,000 rupees in that particular program, so that results I would expect for 5,000 rupees, not 500 rupees. Amount spent direct through implementation agency, so that when you are giving that, you will have to say that through implementation agency how much. It might be the NGO, it might be your foundation, it might be the other corporate whom you are partnering for implementing the CSR program. How much money you are spending directly, for your management purpose, or it might be you are implementing the program, and you can have a mix implementation strategy, so that few programs you are doing probably yourself, and few programs you are doing probably through partner organizations, so that all these details you will have to put in the report. Now quickly we'll get into the schedule 7. What are the activities permitted under this act? Eradication of hunger, in that poverty, malnutrition, promoting, preventing healthcare and sustaining and making available safe drinking water. All these activities are actually in alignment with the Global Compact framework. Yeah. So Then we have promoting education. In that, what the elements we have, including special education, employment, enhancing vocational skills, especially among children, women, elderly, and the differently abled, and livelihood enhancement projects. Promoting gender equity, empowering women, setting up homes and hostels for women and orphans, setting up old age homes, daycare centers, and such other facilities for senior citizens, and measures for reducing inequalities faced by socially and economically backward groups. Environmental sustainability, ecological balance, protection of flora and fauna, animal welfare, agroforestry, conservation of natural resources, and maintenance of quality of soil and air and water. When we will get into the program discussions in the next session, again I will go through that little bit of detail. Today we are actually going through, actually we are running through this, so I will actually get into that again. Protection of national heritage, art and culture. This particular section was, particular provision was included at a later stage. Initially it was not there when it was being drafted. Art and culture, including restoration of building and the sites, historical importance and works of art, setting up libraries, promotion and development of traditional art and handicrafts, welfare of armed forces, veterans and dependents. This is also a provision actually included at a later stage. Benefit of armed forces, veterans, war widows and their dependents. Promotion of sports. This was also included at a later stage, not in the initial draft. Training to promote rural sports, nationally recognized sports, Paralympic sports and Olympic sports. Prime Minister's National Relief Fund. If you cannot spend your money in any of these activities, give the entire money to Prime Minister's National Relief Fund, and that will be considered about your as your corporate social responsibility. Technology incubation located, but these incubators would be has to be located within academic institutions which are approved by the central government. Okay, it cannot be done through any other private organizations or organizations floated by you. It has to be done through the organizations who are approved by the central government. And then rural development. Now, when we'll be discussing, I'll get into each of these little more details, and we'll try to see that based on these, what are the status of different indicators in India, and based on that, what kind of program planning we can do in the next session. Now, in budget allocation, as we said that overall 2% of the 3 years average annual net profit on CSR activities before taxation you will have to allocate in each financial year, beginning this financial year, in fact 2014-15. All expenditure including the contribution to corpus of the project program relating to CSR activities are approved by the board. We have already discussed this. Not include expenditures on activities that do not fall under the purview of Schedule 7 of the Act. Capacity building cost, that means training. In some of the newspapers and some of the articles I have seen that it was interpreted about the salary as the salary. It is not about the salary, it is about any training, workshop. Capacity building cost for your staff members should not exceed 5% of total CSR expenditure, so that don't send your staff members and team members or friends to foreign university to do a course and spend 50% of your CSR money on that particular training. It has to be under 5% of the total CSR amount. Now with that, we'll end today's session. As I have said, that I will actually look at all the questions you have raised today. Unfortunately, today we are running short of time. Next day, when we'll start the session, we will first start with the questions what we have raised today, and I will try to address all these questions, and then we'll get into the discussion. And next day, we'll be discussing about we'll start the sessions on programming, different program sectors. Next day we'll start with the education sector, but before getting into education sector, we'll start with, again we'll go through the Schedule 7 of Corporate Social this Companies Act 2013, and also under the Section 135 of Companies Act 2013, and we'll also look at this list of activities against the Global Millennium Developmental Goals, and we'll try to see that why do we stand at India against all the principles, all the indicators we have said of Global Millennium Developmental Goal. Then we'll get into the discussion of the different sectors, and next day we'll start with the education sectors, and then followed by health sector, livelihood sector, and so on and so forth. So thank you very much. If you have any question, please write it down on the board in the question answer. What is that? Question answer box you have. And what I'll do is that I'll note down all the questions, and next day I will start first answering this question, and then we'll start our next day's discussion. If you have other than those questions, definitely list down what are the questions you have there on the board. Other than those questions, if you have any queries, anything, you want to contact me, you are most welcome. You can write, straight to me. My email ID is written in front of you, soumitra.ghosh@csopartners.org.in. I would be happy to respond to you. Thank you so much, and see you in the next session. Just before we close, just to mention that 2 dates probably will have to change in the next session in the last week of September and last week of August. So the dates of last week of August and last week of September will have to probably change. I will come back to you with alternative dates, and we'll work out some alternative dates as per our common convenience. Thank you so much. Hey, Nicola, can you ask somebody to write down all the questions? Because